Good morning, everyone. Richard here, and welcome to Monday's edition of the Morning Bell. All right, guys, if you can hear me all right, just please let me know there in the chat box. I'm streaming live to YouTube as well as the Ninjacators trading room. I know that we also changed 50 minutes forward the normal starting time. That's so that we from, I think, later this week or perhaps next week start flowing into Jason Love's trading room a little bit, how can I say, without waiting, not too much of a delay between the two rooms. So if you don't know what I'm talking about, then just keep an eye out on your email box and we'll give some more details about that as well. All right, guys, so just a quick, before we look at the markets, the ES, NQ, crude oil and gold, let's have a quick chat about this week's economic calendar. So there's not much happening on the economic calendar today. I think all eyes will be on tomorrow's CPI numbers. Now, these numbers are for the month of August. And as the Fed's been saying, they were looking at a lot of these, how can I say, job numbers, which was already passed, as well as the CPI numbers to decide if they're going to give us another mega rate interest hike again, which I believe is due, if we just go for on the calendar, on Wednesday, the 21st. When they're going to release a federal funds rate, a statement, etc., etc. So, according to some news channels, they've been saying that they're expecting another 75 basis point rate hike. Now, whether the market's been factoring that in, or we're going to see some more volatility, and perhaps another decline. Who knows? So, yeah, it's going to be a very, very interesting time period. I think tomorrow. And I think the big one, like I said, when they actually released that interest rate hike on Wednesday, the 21st of this month. All right, enough of that. Let's quickly have a look at where we're standing on the markets at the moment. Obviously, the ES and both the NQ and the ES, experienced nice, strong inclines last week, and has since reached the previous support zone that turned now potentially into resistance. Remember, we had the support and resistance zones on our charts for quite a while now. Just a quick recap on the ES price found support at a center median line of a very long-term pitchfork that halted this entire decline, which I at the time was saying that we could potentially have seen the end of a correction, or hopefully not worse, the potential WX wave of an incomplete correction, meaning that we could also be seeing something like this that could take us even lower. All right, so with this strong bounce that we've seen recently, I know that last week I was saying that we really need to see price break above this zone with some decent momentum. I think if we can break to 4,235 and a quarter level on the ES, and you probably noticed that we've changed to the December contract, that would be a pretty decent indication that this was potentially just a higher low. So we kind of here in, although it looks very wide, we can see how quickly price can actually reach levels, you know, between, like I said before, rock and a hard place. You know, we really need to see a break up above here. We need to see the strong momentum continue to the upside. And I just quickly want to look at the volume profile. On the way down, we've got a point of control for this previous move to the downside, which could still have been a very volatile ABC correction. So we've got a point of control. Did I get that on properly? Let me just get this off. Whoops. Let's see if I can actually change this. Hang on one sec, guys. I'm being a bit finicky at the moment. Let's rather delete it and redraw it again. I want to get that level or the point of control a bit better than this. There we go. That should be better. Yeah, pretty much roughly the same at 4,156 and 3/4. Let's drop a line in there. Is where the point of control is, i.e. the most volume during this previous move to the downside. You'll see that this point of control almost lines up with the point of control of this move to the upside. Sorry, point control down here, but another volume, high volume area right within this zone. And this zone, if you can remember previously, if you've been following these sessions for a while now, was also determined from that volume profile. Right, so previous lows we had over here from a technical perspective, and high volume node area that we price as reached basically the lower end of that. So lower end around about 4,116, and that upper end around about 4,187 and 3/4, plus minus. Okay. And then obviously that point of control, 4,156.75. Be interesting to see if we can get into that area very quickly, or we're going to start bouncing around between these two zones until we actually get a clear indication where price wants to go and how the markets and investors react to tomorrow's CPI numbers, as well as the interest rate decision, which is due on, when I say Wednesday the 21st. So not much to report, guys. We did kind of say that we'll probably see a strong move to the upside right into that zone, so that did occur. But again, we got to make a break point here. Are we going to slice through this, or are we going to start hovering around? And, you know, if price does break below these previous lows, it was said last week Wednesday, then we'll have to switch to that alternative scenario and look for shorts. Meaning that we could potentially still see a much deeper decline. Could potentially take us into the end of this year, maybe the first quarter of next year. Right, so for now, momentarily, I'm just cautiously bullish towards a bit more of neutral on both the ES and the NQ. You know, it's also trading with market geometry and, you know, price patterns, etc., whatever the case might be. You also want to see price confirmation. In this case, we want to see price confirm that it wants to break above this area. Failure to do so and hovering around into a news event, you know, even after deciding on how, or looking at how price reacts, could give a good indication as to whether we should continuously side with this bullish scenario, or then finally switch to the much more bearish scenario. Alright, so that concludes the ES. NQ, sort of similar thing also again, guys, on a December contract at the moment. If you're trading with NinjaTrader, you're probably automatically rolled over already if you got that notification. In any case, my NQ chart always lags. I know I continuously say this, but I need to just update a few things here. I want to get rid of these lines. And let's quickly have a look where we currently are. So from a market geometry perspective, same thing on NQ. And we used obviously the previous contract that we had an area of confluence within the zone. Price touched the upper limit of that zone, moved straight up to the upside. This I should actually color in green. Apologize. Let me just get that. Yeah, there we go. And we identified an area where potentially market might move lower. And obviously we identified zones all the way to the upside. This zone we did right before price reached it and reversed lower again. Again, same thing we've seen on the ES. We were under the assumption that we potentially seen a third wave sequence to the upside, and we're going to get some sort of correction. That didn't happen. Price moved lower. So it also reached the lower 50% dash median line, which is this dashed green line that you're seeing over here, and found support. And what I didn't show you on the ES previously, but it's very similar price structure. We believed that we had some sort of a first wave, a second wave. We thought we might have a third, and that we were seeing a fourth wave at a time. Price reached this area, and that we're going to get another fifth wave sequence to the upside. Now that didn't happen, which then begs the question is whether this was actually a third wave over here, a fourth wave over there. Very similar price action than on the ES. So this is definitely a possibility, although I do not like the short duration and also the depth of this fourth wave. So like I said, and I'll say this many times over, what I like and obviously how the markets behaves are two different things. But if you do study price formations, how trends tend to develop, especially during the beginning phases, then you quite expect to see a larger or longer duration fourth wave, which is what we just didn't get. So same thing here. We on the NQ also between obviously previous support. In this case, we also have that low percent 50% dash median line here, and then this area to the upside, which I'm actually going to have to delete now. Let me not delete that line just yet. I can actually update this a little bit to the upside, and also want to get the volume profile out. So we've got this little void that price just reaches the upside. A little bit higher up, we got another high volume zone. Let's see during this move to the downside. Yeah, point control here on the NQ at 13,009.5. Let's drop a line in there. And that sort of coincides or is very close to the center median line of this pitchfork, which has for the longest time been acting as support and resistance really, really well as price dance around between these lines. So that line currently is lying right above today's price action, around about 12,952. Like I said, slightly above that, 13,009.5, we got that point of control. So whether the price will make it into here or not remains to be seen. And yeah, not really much different to say than on the ES. I think the NQ's got a little bit more further to go to actually reach these areas of potential resistance in that zone compared to the ES, if we can say that. So yeah, again, was this just an ABC? Could well have been. This could have been a higher low, but then again, we need to really see a strong break above the center median line, which is a little bit different on the NQ, as well as clear previous price structure. Let me get the snap mode on here properly. At 13,296.5, which is just a little higher. All right, in this case a lower high, and that if that has happened, then I think we got a really strong case that a higher low completed and that we're heading back to new highs. Again, this is obviously very easy to say, but we'll have more than ample time to react to this, that if we do see a break below previous lows, or the lows were set last week, I think it was Wednesday, at 11,998 on the NQ, and we'll have to potentially switch to our bearish scenario and try to find shorts to the downside. And I think if that does happen, there's a good chance that price will break these lows in June in both the ES as well as the NQ. Right guys, if you got any questions, then please let me know, both on the YouTube live stream as well as in the trading room. More than welcome to ask me anything you would like with regards to market geometry or trading in general. Let's have a conversation, so don't feel shy to ask if you do have any questions. Alright, so that concludes the NQ. Crude oil. Remember, we've been following crude oil for quite some time, or let's say we were following these downside projections for quite some time, and we noted that we would like, or we thought price was going to break these lows in April. And let me just get those lines out with the actual labels and the low in March. So that was on the October contract, 84.48 and 83.65. Now, I'll be the first to admit that, yeah, it's one thing giving some sort of projections, but it's how price actually got there that was a real pain in the behind, especially if you're trying to swing trade crude oil. Not a market for me at the moment that's conducive to swing trading at all. I mean, look at this insane price behavior that we've been seeing. Straight up, straight down, straight up, straight down. Again, just a quick recap. For the longest period of time, I was saying that we potentially, let me just get the snap mode off, either seen the end of a corrective move here, although price didn't reach this lower median line. It's typically where corrective moves end if you're dealing with zigzags, especially, and using a shift pitchfork setting. Price has not reached that yet, although it did break below these lows, so those objectives were reached, or more of projections. Now we're seeing a bounce to the upside again. Very interesting thing or behavior that we're seeing are these three-wave movements during this decline at the moment. 1, 2, 3, 1, 2, 3. They're all over the show. 1, 2, 3, 1, 2, 3. So I'm hoping, and I think everyone's hoping this because it's very expensive at the moment, has been very expensive, still is, buying gas at the pump, right? So we were saying that we're hoping that this was a 1 and this some sort of a 2 with an A, B, C, and that we're hopefully seeing a build up for a third and a fourth and a fifth wave to the downside, meaning that price might actually move way lower. But yeah, I'll be again first to admit it's been very difficult to figure out what all this mess means. The only thing, and I've been looking at this in quite depth today on an even smaller time frame, is that this could be some sort of a leading diagonal. A leading diagonal moves in three waves, with let's say 5 waves divided in 3 subwaves each of each fifth wave. That 5 waves, that makes sense. I'm talking over my own mouth at the moment. So however you want to label this, 1, 2, 3, 4, 5 perhaps. Although this labeling tool is not giving me 5 numbers, it's giving me A, B, C, D, E. It shouldn't actually be doing that. Still working on my Elite Wave labeling tool. But in any case, what I'm trying to say here is that if this entire move here was some sort of a leading diagonal, and something like that, however you want to mark it. Hopefully it wasn't an ending diagonal, because that would be extremely bullish for price moving to the upside. Then I think we're probably going to see a higher bounce at the moment. And this is the bearish scenario now, where we could potentially, let me rather use that other one, that we potentially seen a first wave to downside, some sort of zigzag behavior to the upside, and then a very strong move down to downside again. That's my expectations, but like I said, I'll be the first to admit that this price action is extremely messy, and good luck trying to figure out what this chart pattern suggests. But in any case, if we have to talk resistance to the upside, if you're a day trader, then I think resistance currently where price is right at around about 88.37ish. Price is slightly above that now, and that's just the low 50% dash median line that I've got over here. But even with this volatility in crude oil, you'll see, although it's acted as support and resistance previously at these lines, that it tends to overshoot and move back and above. So again, not a market that's really great for swing trading at the moment. In my opinion, obviously you might have some different trading strategies than I do. But in any case, slightly above that, we got this center line of this channel sloping to the upside at 91.35. Now we'll have to update these price markers or price levels as the day progresses or this week progresses. So next week, Wednesday, we'll see obviously where price is at and if it reacted to any of these lines. Just be careful that if you are trading crude oil, that you know, we are at pretty strong resistance at the moment. Again, it might overshoot it by some distance, see move lower, up again, whatever the case might be. But it does look like this sequence, or at least the initial sequence to the downside, might have temporarily ended. We might be seeing another higher move to the upside. That being said, if I'm completely wrong about all of this, potentially a break above or below yesterday or today's low, and Friday's low would then be bearish, obviously, and I think then price has a good chance to at least finally reach this low median line, which currently resides around 79.18, give or take. Let's call it 79.20ish. $28.30. Crude oil moves so fast these days, guys, and it's not unusual to see a $2,000, $3,000 move very, very quickly. So give or take these levels, but if you are replicating these market geometry lines on your own charts, then just keep an eye on these levels and potentially expect that you might find support or resistance there. All right, below this line, the low median line, we got this lower channel line, which is not too far off at 77.16. I mean, too far off from this higher level at 79.28. Again, give or take. So interesting to note that we potentially might have finished some sort of initial wave to the downside, or that's at least what I'm hoping for, and that we might actually see a much higher move to the upside again. Whether that's corrective or whatever the case might be, we'll just have to wait and see until Wednesday or Friday again, when we redo our sessions again. Right, guys, finally we have gold before we end today's session. And in the overall pattern, we still believe, although I'm seriously starting to question whether this was the end of correction, and I'll talk about that just in a moment, but I still believe in the larger or the bigger scheme of things that gold is in some sort of a fourth wave, nasty, nonsensical type of correction that's extremely complicated. What I mean by that is we looked at what could potentially have been a move into an high. We have got this high where price actually moved, what, went to 2,141. This is obviously now in December contract. Those prices will change depending on what contract we were looking at the moment. But in any case, bigger scheme of things, I think this entire thing is a fourth wave correction. Now, trying to make sense of it previously, we thought that we potentially had a complex ABC correction to the downside, another complex correction to the upside. It failed to break above that previous high, i.e. a B wave, and that we were expecting a 5-wave movement to the downside, which we did get. 1, 2, 3, 4, 5. Price moved strongly to the upside from a lower red warning line that tracked this entire move to the downside. Now the question here is, with price making a 5-wave move to the downside, that meets the minimum requirements of a C wave of an expanded flat correction, which is this entire pattern that we've been looking at before. But price found resistance, and this was sort of that time when the Jackson Hole Symposium was underway, and we had a very strong decline again. Price then reached now again the same pitchfork sloping down to the downside. Let me just open that up a little bit so you can see what I'm talking about. This low median line, the green one, and it very nearly pipped these lows that were set on the 21st of July. I mean, it came so close to it that I was thinking at that stage that this entire thinking that we've seen a 5-wave sequence to the downside to complete that C wave is not correct. But technically, as long as price stays above the 1,696.5 level, which is just low that I mentioned in July, this could also, very similar looking to the ES All Bait or the ESNQ, this has been a much deeper correction. But it hasn't broken this low. So it could have just been a very, very deep second wave correction. So, yeah. Difficult to say. So I think if we here get a break above this previous structure over here, 1,779.5, that's a good indication that a C wave potentially ended here, and that we're either looking at an A, a B, and a C, a much higher move that could test these highs that was set in August, or a much higher move to follow that potential, thinking that a C wave ended here already, again in July. But for this to take shape, we need to start seeing some of the behavior that we did over here in a very impulsive manner. And again, the CPI numbers, and also I think the biggest sort of news event would be on the 21st. Did I say 21st of September, when those rate hike decisions come out again. So that will be, give us a good indication as to whether we have bottomed already, or whether gold's actually going to go down. I just have no idea how the market's going to react. We had such a mixed bag of, statements from the FOMC. They're saying, if economic conditions improve, then they won't hike rates that much. And what did they do? They hiked rates again pretty aggressively. Now they're going to do this again. Did the markets factor in another 75 basis point rate hike? Who knows? So I'm also a little bit on the sidelines here with gold. Although it has found support, it's now finally broken above a sort of previous little resistance angular line, and the next one up from there is a center line here at 17,063.80, which potentially can be reached. I think if it does break or breach this level, then there's a good chance that price will head to this lower high, and then potentially then test at least these previous highs, or lower, in this case almost a lower high. It's not a confirmed lower high because price failed to break the July low, so I'm so close to breaking at lows. That's why I don't really like to count this as corrective, but it is what it is. Alright guys, I think that's enough for me chatting today. Hopefully you enjoyed today's session. I'll be back again on Wednesday. Thanks very much for tuning in. And again guys, if you've got any questions, then please feel free to ask that in the chat box, and then I'll be happy to answer them. If not, then we'll end today's session here, and like I said, I'll be back on Wednesday again. Alright, cool. Doesn't look like there's any questions coming in. Again guys, thanks very much for watching. Hope you all have a fantastic weekend, and looking forward to the week ahead. Until next time, take care and goodbye.